And I'm back again on your screens to provide you free Forex training or tutorials on Leading Forex YouTube channel. My name is Kofi, your admin for this channel. Today, we'll be looking at more tools or indicators that are customed in the MT4 or MT5 platform. As a trader, you need to have sample of these indicators to test and know how the market behaves, so that when you find similar ones that are better than the already existing ones in the MT4 or MT5, then you can say you are becoming a professional trader. But there are people who also use these custom indicators to make profit in the market. And that is what I am here to show you. That is what I am here to actually expose to you. So if you are ready, today we'll be talking about the CCI indicator. We will also be talking about the stochastics indicator. Others also call it stochastics. Whether stochastics or stochastics, we will be looking at that indicator today. We will also be looking at the bears or the bull indicator. All can be found on the MT4 or MT5 when you download it. So without wasting much time, let's go straight into these indicators and see how we can actually use them in the Forex trading market. Now, in case you want to get in touch with me, you already know how to get in touch with me because I have my contact details on these videos that are on this channel. So if you go to my previous videos, you can actually get my contact. Telegram, Facebook, WhatsApp, and then phone call. All is available for you to get in touch with me. Now, if you are a new trader or if this is your first video seen on this channel, then we have a lot of videos. This is the part 50 or the 50th video on this playlist, which is Forex training for beginners. So you may have to go and start from the part 1, part 2, and come all the way to part 50, which is this video, so that you can actually exhaust all that we have on this channel in order to understand what we are doing. So let's continue. Like I said, today we are looking at some tools. And like I said, we'll be looking at the stochastics or the stochastics. And we will also be looking at the CCI indicator and then the bears and bulls. So let's go let's take the stochastics first, which is this indicator here. So when you go to the indicator column, you see it here. The stochastics or stochastics is here. So let's bring it on the chart. Here it is on the chart. Now let me mute my camera so that the chart or the screen will be full for you to see whatever we are doing. Now, the stochastics or stochastics indicator is here. Now, this is the indicator. This is it at the down here. All right. It comes below the charts or the candles. So you always see it at the bottom here. Now, this stochastics indicator has two main parameters. We have a thin line that you can see up here. So let me actually point to it for you to see what I'm talking about. We have a thin line here, okay? And that line can be seen here. And then we also have a line below. It's a dotted line, which is also below here. Now, these lines have numbers. The top one has a number of 80. The down one has a number of 20. Is it 20 or 30? Yeah, 20. Perfect. So this one has a number of 20. This one has a number here, which is 80. That is the default settings that you will find on this indicator. Now, in case you will want to tweak the settings, this is how you can actually tweak the settings of any indicator. All you need to do is to right-click on the chart, go to indicator list, click on it. You will see the indicator that is on the chart. So on this chart, we have the stochastic indicator. Highlight on it, click on edit. Then we have the about session, we have the common session, we have the input session, we have the levels, and then we have the visualization. So this one, it's ticked on all time frames. So that is why when you flip to all the time frames, you see the chart showing the indicator. But if you need this indicator on some specific chart or time frames, you may have to untick this one and then manually tick what time frame you want to see the indicator. But on this chart, for instance, I want to see it on all time frames, so I leave it on all time frames. The levels, you can see the levels here, 20 and 80. So that is what you see on the chart here. So in case you want to change the figures, which is the 20 and then the 80, all you need to do is just to highlight, double click, and then you can change the number. All right. If the 80 is what you want to change, you just have to double click and change. So whatever settings you want to do, you can actually do it here. All right. So these are the inputs. If you want to allow DDL imports or whatsoever, you can just do it here. So this is how you can, what do you call it? Edit or tweak the settings of any indicator. Is that okay? Once you want to bring everything back to default settings, all you need to do is to click on reset. When you click on reset, it will change all the settings that you have done and bring it back to its default settings. And in case you want to tweak, just do the tweaking. And then once you are done, you click OK. And then the settings will appear on the chart here. But for the purpose of this video, we are not doing any tweaking. We are not doing any changes. We just want to use this indicator on its default settings. Is that okay? If in case you find another video that is talking about how to reset the stochastic to give you better profits, you can try it and see. But for the purpose of our training, we are leaving this video at its default settings. Now, like I said, these two lines, the one above and the one below, one is 20, one is 80. And then we have some lines which are moving averages. The red one, and then is this blue? I think the ladies will do well in terms of colors, but we the men, sometimes we find it difficult to be sure. So we have two lines. One is red, the other one is light blue. I don't know if I'm right with the light blue, okay? So these two lines are moving averages. So if I go back to the chart, you actually see, or if I go back to the indicator, you see the averages. One is 5, one is 3. So these are the two averages that you see here, the red and then the light blue. They are the 5 and 3. Is that okay? So in case you also want to change the figures, you can do the changes at any time. All right. So what this indicator does is that it tells you that whenever these moving averages come above the top line here, it means that the trade is overbought. And then whenever the trade or the moving average comes below the 20, it means the trade is oversold. I'm sure you are familiar with these words. Overbought, overbought, and then oversold. I'm sure you are already familiar with these two terms. So we have overbought and then oversold. When we say overbought, all we are trying to say is that the trade has gone more than it's supposed to go upwards. And for that matter, we will be seeing a downward or a reversal. So that is when we say a trade is overbought. That means it has gone up above the limit it's supposed to go. And so you should get ready for a possible reversal downwards. That is overbought. And when we say oversold, it is also the opposite. So it means the trade has gone beyond its level that is supposed to go in terms of coming down. And so you should get ready for a reversal upwards. So getting ready for a reversal upwards is when we say oversold. And then getting ready for a reversal downwards is when we say overbought. Please, is that okay? Good. So this indicator helps us to get the overbought and then the oversold areas. That is what this indicator does. So, for instance, when we look at this pair, this is AUD card 4-hour time frame. AUD card, for instance, over here, it says it is over what? Overbought. Don't forget the terms. Overbought means it has gone up beyond the level it's supposed to go in terms of the upward movement. So this is overbought. So let's look at, let me get a line to actually put it on that very spot. So this is the territory when the trade went overbought. At that same time, we were up here. So if this becomes a territory to go sell, you would have made some nice profits on the downside. Are we good? So the trade, the indicator told you that this trade is over what? Overbought. And if you followed what the indicator said, by looking at this over here and looking at this over here, you would have made some nice profits downwards. Is that okay? Good. At the same time, this indicator came oversold, tried to go up again, and went overbought again. This was the oversold territory. There was a first oversold here. Look at it. Oversold here. This was the oversold area. It only went up a bit. I'm not sure you may be making any much profit, although it's 4-hour time frame. So if we are to look at it, let's look at how many pips. This is 4-hour time frame. So it went oversold here. That's 59 pips. Yeah, those who are scalpers will actually make some profit from here. Almost 60 pips is enough for scalpers. So if you're a scalper, you may be making some profit here. So that is the over what? Oversold territory. And then it went up. Now, this indicator went up. It couldn't get to the top. It only reached here and then returned back down. And then it came back down to another oversold area, which is somewhere here again. Now, let's look at it again. This is 4-hour time frame. Another oversold here. And then it went up again for 84 pips. So the scalpers, even if you are not a scalper, if you're a day trader, 84 pips is not small profit. Okay. So another oversold, it went 84 pips up. And then this time round, it came to another overbought territory, overbought here. So if you had gone in to sell at this area, the trade came all the way down again for about 164 pips, 164 pips. That is also another good entry. So this is stochastics. Now, stochastics can actually fail you a lot of times. And it does that when you don't look at the trend of the market. And then sometimes it can fail you totally. Let's go back a bit and look at some of the failures I'm talking about. Look at this. Let me see if it was actually a failure. Let's look at here. Good. Here. This is a big failure, like I said. It can sometimes fail you. Look at this. The trade was what? Oversold over here. At the same time, oversold here. If I should put the line, look at it. See it? Exactly the spot it went oversold. So it went oversold here, also came oversold here. And it never went up over here. Although here the indicator started moving up for a buy, but on the chart itself, it never went up for a buy. So this would have been a lost trade. Did you get that? Again, the indicator went up a bit, came back down to another oversold territory. Let's look at that area too and see whether it was a flop. Yes, this was another oversold area. Okay. And you realize that this one too was another failure. It was a loss because this was where the trade went oversold again. And then it came oversold here, but it never went up again. It rather came back down continuously. But if you look at the stochastics, it tried to make an up move and then came back to another oversold. So it was the third oversold that actually worked. The third oversold here, third oversold here. So the first two would have been losses. The third one gave you the profit. Look at the third oversold here. So this one went up and gave you 82 pips. 82 pips. Now, it went up, gave you 82 pips, and then gave you an overbought area. And this was where it went overbought. And look at the number of pips it gave you from the downside. It gave you almost about 217 pips on the downside. Now, what is the trick here? Let me give you the catch over here in case you are going to be using the stochastics in trading. All right. The very first thing I will advise you to look at is the trend of the market. That will be the very first thing, because if you look at this on the 4-hour, so the trend changed here. This was the point at which the trend changed. And then the trade started coming down. If you look at it, look at the trend. From here, it came down to a very nice sell trend. So from here, if the trade was a sell trend, maybe how do you confirm this is a trend? When you get two resistant areas. These are two resistant areas. 1, 2. So the third one becomes a confirmation of the trend to sell. So you got that. So you wouldn't have taken maybe this one over here, but this would have been a clear trade to take because the downtrend movement would have been triggered. So you would have taken a sell here and boom, you made how many pips? How many pips would you have made if you are using this in terms of trend? You would have made 223 pips. Let's continue. You still want to follow the trend, a downward trend. It made an up move. You are watching the stochastics. It made an up move, but didn't come to overbought. Made an up move again, didn't come to overbought. Didn't come to overbought until it came overbought here again. Still, we are in a downtrend. So getting another overbought here, what will you do? Another sell. Are we good? So if you sold here again, look at it, boom. Came all the way down to about 302 pips. This is how you can actually use stochastics to trade by following the trend. Once you catch the trend will help you to make a lot of profits. Let me pick another pair so that it wouldn't be like I'm randomly picking. I'm not randomly picking. I'm just picking any pair at all. Which one do I even pick? I don't know. Let me just get one and pick. Which one do I pick? Let me look at one of the slow pairs, like maybe Euro Chef. Let me pick Euro Chef. This is Euro Chef. Now, this is Euro Chef, all right? Euro Chef, if you look at Euro Chef now, it's in an uptrend, isn't it? It's in what? An uptrend. If that is the case, where did the trend start making the move? This was the reversal here. So we got the first point here. Watch it. This was the first support area, second support area. So from here onwards, we are in what? We are in a buy. Is that not it? So this is the trend for a buy. So where again did we get a buy? So this is another oversold area, which was here. So we would have taken our buy here, and how many pips up? It gave us 124 pips on the upside for a buy, 124 pips. And then currently, as we speak on Euro Chef, it has made another oversold. But this oversold hasn't moved. If you look at it now, the indicator actually moved, almost getting to an overbought area, but stochastics is moving, but the chart, the market is still standing at one place, not moving. You get it? So this is it. Even if you had entered a buy, you would have been in some small profit by now. Just that 26 pips profits. So this would tell you that since this trade is already making an overbought area, you should be closing this and get out of the market. So maybe you might have closed this trade back on entry because since this is getting back to an overbought area, it's a signal. This is not moving, but this has moved to an overbought area. So That should tell you that maybe the trend will continue back downwards. So there will be a need for you to get out. There'll be a need for you to get out. So maybe you close back this trade at an entry point without a loss. But this is one of the slow pairs I can ever pick. And then we look at it. Now, there might be better ways to use the stochastic. So I wouldn't want to waste my time on this. But in case you find another way or a better way to use the stochastics in trading the forex market, you can actually use that. But for me, if you want to use it, in order not to get a lot of losses, you may have to stick to the trend. You watch the trend before actually using the stochastic to make some trades or to play some trades. But in case you want to combine one or two more trades, one or two more indicators, maybe you have another indicator you want to add to the stochastics, you can do that. So it's also something you can do, all right? So that is stochastics. Let me close stochastics. And then let's pick our next indicator, which is the CCI. CCI indicator. The CCI, where are you? CCI. Okay, the CCI is somewhere here. This is CCI indicator. So let's bring the CCI indicator. The full meaning of CCI is Commodity Channel Index. Commodity Channel Index. Commodity Channel Index. So it was actually designed to be used for trading commodities. Commodities like rice, gold, and the rest. But now people are using it in the forex market. So let's see. This is the CCI indicator. And something that was meant to be used for trading commodities is actually not going to be friendly in a new market like forex, because these are currencies, and currency trading is different from commodity trading. Although the movement might seem similar or might look the same, but what will influence a commodity to move will be different from what will influence a currency to move. So this is something we must all take note of, okay? Commodities has to do with supply and demand. When there's high supply for some goods like rice, or maybe crude oil, or maybe gold, when there's high demand for it, it becomes scarce. The price begins to rise. But when there's low demand for this commodities, then the price begins to fall. You understand? So that is how it is. For instance, if you look at crude oil, when COVID came, when we had COVID, and most countries decided to do what we call lockdown, there was no much activities. There weren't a lot of companies working. Some companies have to close down, lay their workers off, or make some workers to go stay at home. And because there weren't much demand for crude oil, we all saw crude oil falling. So crude oil fell until countries started lifting the ban on people sitting at home and the rest. And so when the lockdown started coming to an end, we started seeing the price of crude oil going high until this Russia-Ukraine war or conflict came. And sanctions were placed on Russia, which is one of the countries or the leading producers of crude oil. And because Russia was sanctioned by so many countries, European Union, and then the United States, and so many other countries had to place what we call a ban on Russia. And since they placed those bans on Russia, Russia also decided not to supply crude oil to those countries, because the countries decided they won't buy crude oil from Russia, because if they buy crude oil from Russia, it means Russia is going to be making money and to be able to finance their military to be able to do whatever they want to do to Ukraine. And so they decided they won't buy crude oil from Russia. These were some of the sanctions. And because of that, crude oil became scarce. There wasn't much crude oil on the international market. So the price of crude oil has gone up again as we speak. So these are the factors that will cause crude oil or commodities to rise in price or fall in price. Currently, as we speak, we are beginning to see or hear of food shortage. So some commodities like rice, wheat, and the rest will begin to rise in price. So there are factors that will make commodities to appreciate or depreciate. That is very different from currencies, and we need to also take note of that. So let's continue. So the CCI indicator was actually a commodity trading indicator, and it has a similar pattern with stochastics. The overbought, oversold kind of philosophy works with the CCI indicator too. So once you bring the CCI indicator on the chart, these are the parameters. They have the 100 and then the negative 100. They have the 100 and then the negative 100. So once the trade gets to the 100 territory, it means over what? Bought. When it comes to the negative 100 territory, it means oversold. And if you look at this, you see that this is not working good at all. It's not working good at all. But that is the philosophy behind the CCI indicator. So look at this. For example, the trade came overbought over here. And if you should put the line to indicate where the overbought came or happened, that was here, overbought. And so it's supposed to come sell. And you all agree with me that the trade went all the way up for a buy. It went all the way up for a buy. Did you see that? So this is how the CCI, it went up about 250 something pips. So this is how the CCI, if you watch it, the CCI remained all the way up, was up there until it fell again, came to another oversold. I think that oversold actually worked. This one gave you the profit a bit and then came to overbought. This overbought would have also worked a bit because it also came down and gave you profit. And now currently it came to oversold. And as we speak, the trade is still standing at the same place, no movement. So this is how the CCI indicator also works. So I won't spend much time on the CCI. So the CCI indicator works just like the stochastics. Are we good? So let me clear the stochastics. Sorry, the CCI. Now let's look at the bears and then the bulls. So if you look at here, these are the bears and these are the bulls. These are also indicators, okay? Let me bring the bears, for instance. This is the bears indicator, also on the 4-hour. This indicator is only for sellers. If you want to determine whether sellers are in the market or not, all right? So this is for sellers. Are we good? Now, if this is for sellers, this is when the indicator, the bars start coming down, that is when we have sellers in the market. But when the bars are up, it means that, yes, there are sellers in the market, but it is the buyers who are in control. So when the bars are up like here, it means it is the buyers who are in the control or in control of the market. They are in control of the market. But when it comes down, it means the sellers are back in the market. And when you see something like this, some minor buyers in the market, that should tell you that there's a probability that the sellers will take the trade back down. And for instance, look at here. At this point, there were some minor buyers in the market over here. And that is it over here. Minor buyers in the market. And if you look at it, you begin to see that the buyers started depreciating, started falling. And then the sellers took over the market again and brought it down. Did you just see that? Good. Now, if you really want to use the CCI to trade, you may have to look at, the bears or the bulls. You may have to look at very trending markets. So if I should go for another pair, like maybe GBP USD, this is GBP USD. So the sellers came in the market here. The little buyers came in here. The sellers took again in the market. A few 2 bars of buyers, and then the sellers took over. So you see that there are no much buyers at the top here. If you look at the whole of this top here, there are no much buyers. So what do you do? For instance, assuming you want to use this bears with maybe stochastics, this is another way you can also trade the stochastics, supposing you have another indicator to pair with it. So let me bring stochastics back. So this is stochastics. Now you know there are more bears in the market than the bulls. So that should tell you that the trend is what? It's a downtrend because there are more sellers than there are buyers. So that tells you that if you also want to know how to know the trend of the market, you may have to use this. All right. So if you want to be selling, you want a downtrend, this you use the bears. If you want an uptrend, you use the bulls. Is that okay? Good. Now, if that is the case, we know that there are sellers in this market more than buyers. So if that is the case, we will only be taking overbought trades. We will only be taking overbought trades. All right. Now look at it. If that becomes the case, this point here, you would have taken what? A sell, came down, gave you some 100 pips. You would have taken another sell here, came down, gave you how many pips? 440 pips. So just these two trades would have given you about 500 plus pips. Just taking two trades. Do you get it? So once you add the bears, if we should go back, look at the bears, still bears. It has been bears in the market. I've just gone back a bit. Look at this trade here. This is oversold here. There are bears in the market too. Looking at the down. You see that there are more buyers than there are, there are more sellers in the market here than there are buyers. So if that is the case, this is another overbought area. So here, you would have taken a sell here because there are more sellers. So you also want to sell. So you would have gotten 155 pips. Again, you got another overbought here. So that is another time to enter a sell. You entered a sell here, it came all the way down, gave you about 640 pips. So just your two trades alone would have given you about 700 pips profit. So this is how you can actually add one or two more indicators to the already existing ones to make the trading better. Okay. So if you want to use the bears and the stochastics, or the bulls and then the stochastics, if you want to be catching the up trades or the buy trades, then you need to use the bulls along with whatever indicator you want to use. But once you begin to see that the bears are diminishing or they are reducing, that should tell you to be careful. And for instance, if you look at here, look at it, they came to their peak here, reduce is reducing now. It's reducing now. If you watch, the bears are currently reducing. Currently what? Reducing. And that should tell you that it's possible we may be seeing another trend soon. But if you want to really see the trend happening, you may not have to use the bears. If it's going to be an uptrend, you may have to use the bull. The bull one is also there. So we have the bears and then the bulls. The bears is going to be for selling. The bull is going to be used for what? Buying. So this is how you can actually use these indicators together. You can use more than one indicator. You can combine 2 or 3 indicators and then use it to see whether you can catch some good trades. Is that okay? So this is how you can use multiple indicators to make some good trades or catch some good trades. Now, I have given you enough of what I want to share with you today. Now, the rest will depend on you to do what we call due diligence by going into other videos if they need be, maybe other channels, to watch more videos and then see how other people are also talking about these indicators. And maybe you may find a better way than what I have shown you, or you may be seeing another way to use these indicators. And then once you use them, you can begin to make the profit once it works. Now, let me say this. If you are using these tools, don't rush. Test this tool for maybe a couple of 6 months. That is why we always have demo trading available. Don't be in haste to start putting your hard-earned money. Maybe you set up 2 trades, you got a profit, and so you feel like that is okay. It is the best to go. So you start pumping in your real money. And then after 1 month or 2 months, you begin to see that, oh, you are making losses. or you've even lost your money. So take your time, experiment whatever you have found for 6 months, or even if you like, a year. It's too much to waste a year in trying to find out something which is good or going to help you for the rest of your life. It's not going to be bad to just use 1 year to test and find and get something good that is going to help you for the rest of your life. I don't know how many years you have left, but if you have about 30, 40 years left to spend on this earth, and you waste just 1 year of it to get something that is going to give you profit for the rest of your life, I'm not sure you have wasted the 1 year. Okay, so take your time. Don't be in haste. Forex is going to be here forever. Your children, your great-grandchildren, they are going to come and meet Forex. So don't be in haste. Take your time and then do what we call due diligence. And once you find out something that is good, that becomes a system for you that is going to make money for you. And you are going to pass on that knowledge to your children, your kids, and they can continue using it as a system to make money for the rest of their lives. And you would have become the foundation for their success. So take your time. There are a lot of ways to make trading easy. You only have to take your time and explore and find out more strategies. Test them. Whilst you may be testing something like this, you get another one and be testing. So at the end of the year, you have more than 5, 6 strategies. Then you now sit down, find out which one gave you the profit more, and then do your analysis, do your calculations. And then at the end of the day, you'll be able to come out with maybe 1 or 2 that will be something you may want to rely on. You get it? So keep trying and keep rehearsing, trying and testing. And I'm sure you'll get something good out of this market, which will help you to get the success and then the money that you need for the rest of your life. My name is Kofi. I'll come your way with more videos. All you need to do is to stay glued to this channel. Subscribe to this channel. We are almost hitting 2K subscribers. I know very soon this channel will hit 10K, 50K subscribers. More than that, I may be hitting 1 million subscribers soon. So hit the subscription button and subscribe. Also like our videos so that YouTube algorithm will recommend it to more people to watch. Until then, get ready for my next video. I'll see you very soon.